It was the first asset that started from the little people, right? It wasn't an institutional asset where at the end the taxi cab driver buys it and it's time to sell. It was a global revolution, and it was the first global asset, right? In 2017, when we had that great bubble, that was fun. And one thing I learned about Bitcoin, it's always sold, it's not bought. Somebody sits down and explains it to you, right? What's the macro story of Bitcoin? It's relatively simple. Our government can't keep its pants on and is spending too much money. And when you spend more money than you take in, you depreciate your currency. And
within the constantly evolving realm of cryptocurrencies, one voice emerges as a light of hope and wisdom. Let me introduce you to Galaxy Digital's brilliant CEO, Mike Novogratz, who is well known for his positive attitude toward cryptocurrencies, has grown to be a significant player in the financial industry, thanks to his unshakable trust in the potential of digital assets. Novogratz is quite optimistic as we approach 2024. He bases his optimistic outlook on a perfect storm that is developing in the macro environment and an increase in adoption. The launch of spot Bitcoin ETFs, in particular, has sparked a profound shift in mindset and opened up a universe of possibility valued at tens of billions of dollars. When the U.S. Securities and Exchange Commission approved these ETFs, it was a turning point that broke myths and led in an unprecedented amount of demand. In the next months and years, Novogratz sees this demand only becoming stronger, pushing Bitcoin and the cryptocurrency market as a whole to unprecedented heights. But Novogratz is excited about more than simply regulatory accomplishments. During his speech at the recent Bitcoin Investor Day in New York, he discussed how his bullish view is shaped by the macroeconomic environment. Even when things are gloomy both domestically and internationally, Novogratz finds a bright spot. He thinks that these circumstances will only serve to increase the allure and durability of cryptocurrencies rather than discourage investors. Come explore Mike Novogratz's path, his thoughts on regulation, and his unwavering faith in the revolutionary power of digital assets as we dive into his ideas. One thing is certain in an uncertain world. Mike Novogratz is infinitely optimistic about the future of cryptocurrencies.
Bitcoin is a macro asset. Like, what got me into Bitcoin in 2013 when it was trading at 98 bucks was somebody called me and said, look into this thing. And I was like, macro asset. And I was a macro trader. At that point, the story was inflation was coming, right? We had 2012, the European financial crises, and everybody was worried about inflation. It's funny how the consensus can be wrong sometimes. Paul Singer, anyone who knows Paul Singer, he might be one of the greatest investors of the last 30 years, runs Elliott Advisors. Tough. He took an ad out in the Wall Street Journal and the New York Times, wanting Ben Bernanke, the chairman of the Fed, to go to jail for what he was doing with QE2. Not kidding. And it was signed by 50 really intelligent people. They were so worried about inflation. And so that's why I thought, you buy about Bitcoin, it's got an inflation hedge. China was buying it. There were a lot of people that had lost faith in governments, right, post-financial crises. And so I was like, macro asset, buy some. And I remember looking at the chart and saying, this thing's gonna go to 1,000. And sure enough, it went to 1,000. Matter of fact, I was on the cover of the FT, the only time I've ever been on the cover of the Financial Times where I was at a conference like this. I didn't know the press was there. And I said, Bitcoin's going to go up because this, and this, it's going to go to 1,000. And August 2013, you can find it. There I am. And then it went all the way back down. But I got hooked with this idea that, and you talked about this, it was the first asset that started from the little people, right? It wasn't an institutional asset where at the end the taxi cab driver buys it and it's time to sell. It was a global revolution, and it was the first global asset, right? In 2017, when we had that great bubble, that was fun, right? It was more of an Ethereum-led ICO, Bitcoin to 20,000. I remember saying over and over, like, this is the people's revolution, right? Mr. and Mrs. Watanabe in Japan, Mr. and Mrs. Kim in Korea, people in India, in Africa, in Nigeria, all over the place participating. There are no global markets, really, right? Gold is a global market, but in the 1999 tech bubble, that was a US bubble, right? There was a few people that participated in outside, but broadly Japanese people buy Japanese bonds, right? And so here's the first global asset. And it was, people driven. And so I started this way, way early, this tagline, the herd is coming. And boy, did I feel silly for years. I was talking about the institutional herd, right? I was one of the first institutional guys, me, Dan Moorhead, there were a few of us to start telling the Bitcoin story to institutions. And most of them just said, oh, that's really interesting, close. A few intrepid, you guys had Fairfax County, got in early, but very few institutions did. And so I look back, if I made a mistake in my Bitcoin journey, it was probably building an institutional business when I should have started with retail, because it really was a people's business. Wall Street beats you up and wrings you out and slaps you in the face over 25 years, but you'd like to think you gained some wisdom. And most of the crypto community was young, at times naive, full of big ideas, sometimes silly. And I thought I had some role to play at trying to bring some wisdom to this community and trying to get the older, stodgy crypto institutional community to understand it. And so it checked all my boxes.
The spot Bitcoin ETFs have been a huge success, but U.S. regulators, especially the Gary Gensler-led SEC and famous anti-crypto politicians like Elizabeth Warren, remain strongly against this market. Mike Novogratz believes that while anti-crypto sentiment will likely persist in the short future, it will quickly shift after the elections in November. The Billionaire investor claims that Americans have already shown their preference for Bitcoin. Ever since at least 2021, Novogratz has been a strong supporter of regulatory certainty in the cryptocurrency field. He stressed the need for increased regulation in June of that year when speaking to a conference in order to boost institutional investors' trust and advance the asset class. Even though Novogratz's argument is controversial in the crypto community, he believes that regulation is essential to drawing in institutions to join the revolution. During a conversation with Anthony Pompliano, Novogratz also discussed the macroeconomic environment, highlighting how erroneous state regulations fuel the rising appeal of Bitcoin. So let's hear what he has to say.
The two vectors have always been macro, right? Why Bitcoin, right? And so that's the same broad story as gold, silver, other hard assets, and adoption. So right now, adoption's way overwhelming because we've just tapped into, so here are the numbers. There's $84 trillion of wealth, owned by US baby boomers. Baby boomers are broadly 60 to 80 years old. They are entering into their die-off phase. They broadly invest through registered investment advisors. You call your broker at Dean Witter or Morgan Stanley or AJ Edwards and say, hey, what's my portfolio? Put a little bit here. That is the ETF process, and it has just started. And so early, big adoption, a lot of the smaller platform regional brokers have been buying, but a lot of the big platforms like Morgan Stanley, and they're still not selling yet. They're going to, they're getting prepared to. You can buy it on their platform, but the salesmen aren't selling it. And one thing I learned about Bitcoin, it's always sold, it's not bought. Somebody sits down and explains it to you, right? What's the macro story of Bitcoin? It's relatively simple. Our government can't keep its pants on and is spending too much money. And when you spend more money than you take in, you depreciate your currency. And that went from a problem in the early 2000s, 2007, 8, 9, 10, 11, 12, to a crisis with Donald Trump, right? And then Joe Biden. Trump and Biden will go down as the two presidents who destroyed our fiscal stability, right? Trump raised government spending a ton before COVID. And then when COVID happened, it was, let the dogs out. Biden came in and said, now I've got this cover to run my progressive agenda that helped me get elected. And I'm doubly panicking on the COVID, relief. And so we went from, and this is a little nuanced, but it's important to understand. We went from a government that believed at our core that the federal government is allowed to spend 20% of GDP every year, and we try to tax 20%. My first job in life was working at the Office of Management and Budget under Ronald Reagan, 1984. And I learned that. You tax 20, you spend 20. We did it 1 year, 1999 with Bill Clinton. Since I've been post-college, the budget has been balanced 1 year in America, right? But we got close, 2% deficit, 3% deficit. We're now running structural 5, 6, 7% deficits in a good economy, right? Keynesian economics says you're supposed to run deficits in a bad economy and run surpluses in a good economy. We've normalized spending 25% of GDP on federal government. That's this year's budget, next year's budget, the following year's budget. That happened like this. It happened between Trump and Biden, and that's insane. If you take the Congressional Budget Office's predictions, which are always rosy, right? They always are more optimistic than they should be. In 25 years, it has debt to GDP at 250%. Like, that is a recipe for housing prices going higher, Bitcoin going higher, gold going higher, silver going higher. And until you see a government, both Dems and Republicans, that say enough, we are going to go back to a Simpson-Bowles balanced budget amendment. We are going to cut spending from 25% back to 18 or 19%. Bitcoin's going to keep going higher.
In closing up his informative talk, Mike Novogratz emphasizes the critical roles macroeconomics and adoption have had in determining the course of the cryptocurrency space. Novogratz begins with macroeconomic issues and provides a clear illustration of how the story of Bitcoin is consistent with the story of conventional hard assets such as gold and silver. He explores the complex relationship between government fiscal policies and currency depreciation, showing how overspending has eventually caused fiat currencies to lose value. Novogratz highlights the rise in fiscal management by succeeding governments, especially under the administrations of Donald Trump and Joe Biden, and dates this pattern back to the early 2000s. Even in times of economic expansion, the government's increasing deficits highlight how urgently fiscal balance needs to be restored in order to prevent long-term consequences. Novogratz's study sheds light on the possible effects of this unsustainable fiscal trajectory on asset prices, with gold, silver, and Bitcoin expected to act as hedges against future currency devaluations. Moving on to adoption, Novogratz provides a thorough analysis of the changing investor demographics in cryptocurrencies. He draws attention to the baby boomer generation, a group that controls a large portion of the world's wealth and that often makes investments through reputable sites like Morgan Stanley and registered investment advisors. Major institutions were initially hesitant to accept Bitcoin ETFs, but Novogratz believes that as these organizations adjust to the new environment, adoption will change dramatically. He emphasizes the need of simplifying Bitcoin for regular investors and clearing the path for wider market involvement. He also emphasizes the need of education and interpersonal connection in fostering adoption. In conclusion, Novogratz's thorough research gives viewers a better knowledge of the intricate processes at work in the Bitcoin market. His observations highlight the relevance of macroeconomic fundamentals and changing adoption patterns, providing insightful advice for investors trying to negotiate the complexities of this quickly changing business environment. If you enjoyed this video, consider subscribing and clicking the like button. It helps us understand what content resonates with you the most. Until next time, happy investing.